Hey everybody, Art Wood, your favorite mortgage guy. If you didn't know, just ask me, I will tell you. So just wanted to give you a quick update on the market. Interest rates have been cooperating, which is great. They're now, say solidly down from under 7. So they're 6.75, 6.875, high sixes basically, for a primary residence with good credit, blah, 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 all that stuff. But part of the thing is the feds are starting to see the cracks in the economy a little bit. When Jerome Powell talked about at the Senate Senate hearing, he said that maybe they're not getting good information, which we're like, duh, that's what we've been telling you. So everything that we got this week so far, we had tame inflation. From the PCE, that was fine. We had higher continuing claims on joblessness and unemployment. Consumer sentiment was terrible. People's spending habits, consumer spending was as bad as it's been really since the pandemic. So I'm hoping you're starting to pay attention because, it's getting tough out there and you don't want to be behind the 8 ball, if you will. And it's also interesting. The other thing driving rates down some is that. But the other thing is that Trump is starting to talk about his successor for next year, for Jerome Powell, not Trump's successor, but Jerome Powell's successor. And Scott Bessent is one of the potential candidates, and some of the other folks, and they're more dovish, which meaning they're saying, hey, by the way, our rates are way too high. So if we had a new Fed chair that was more dovish come in, or even if he is already named as a successor, then I think we would see continued decline. So we really need to probably get another half point down, to where it would make sense for refis to happen. And I think it would open up the housing market, because this summer, honestly, for me, since Memorial Day, people have kind of been sitting on their hands a little bit. So hope this helps you out. The good news is rates have been coming down. They've come down really. The 10-year Treasury's come down from about 4.45, and it's down to about 4.25. So really in the last couple of months, it's come down a quarter, which is great. So if you care about those things, I'm glad you listened. If you don't, then click to the next video. Follow me, do whatever you do. But I'd love to turn your mortgage into a work of art. Take care.